All right, everything looking good. We are live. Let me know in the comments. We're coming through loud and clear. I would greatly appreciate it. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on May 20th, 2022. Before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So that being said, we will jump right in and take a look at these markets. We are currently seeing crypto giving a little bit back. It was overall, getting a little bit of a bounce over the last 24 hours. Had a nice bounce up back to some resistance, and it appears we are getting rejected. Definitely paying close attention to the 4-hour at the moment. Just watching to see if we can cross the 821 back to the upside, if we can reclaim that key level at 30,675 on Bitcoin. If not, I think we are going to be headed down to revisit the lows. Recently put in our lowest low, just around like 25,000. And it seems very, very likely that after our bounce, we're getting no follow through, that we are in fact going to revisit those lows. At which point in time we can start looking for divergence or something like that. I appreciate that, Rakid. Loud and clear, he said. Appreciate that, my man. Hopefully you're doing well today. So that being said, we'll jump right in and take a look at our TA, discuss a couple of things. So first, the TNX. 10-year treasury yields having a small pullback below the 8 and 21. It does look like at this point in time, if we don't reclaim that 288 level, that we will in fact get across the downside. We do have the hard sell. We have left the bullish control zone. We have all red histograms below the slope line. Definitely looks like we are going to get a pullback in this, just waiting to see when it happens. But that's expected. I do expect it to go higher over time, but I think right now we're having a little cooling off period. TLT. So we have hit the bottom of the channel, hit our targets, and we're basically just hanging out around this level, still hanging out in our accumulation zone. While I'm not massively bullish on bonds going into the future, there is probably going to be a nice pop on them, at least short to midterm. I expect something like a push up to about 129. We're yet to see if that is going to be the case, but we do have the hard buy signal. Stochastics are angled to the upside. We have all green histograms. We're above the slope line. We're approaching the zero line. So we're not in a upward trend yet. We're clearly still in a downtrend or retracement, but we are close to crossing the 821 back to the upside. If we can start to consolidate around 119 or so, somewhere around there, I think it's very likely we do get that push back up. And that, it's not going to be a game changer, but we're looking at something like a 10% rally in bonds. And we'll have to see when we get up there if that's going to be a selling opportunity or if we expect continuation based on price action. So next we have U.S. oil. So U.S. oil has been trading inside this triangle. Instead of breaking to the downside, it actually broke to the upside. Was looking like a distribution pattern. Now it's looking like just a horizontal channel. We just hit the top of the channel a couple days ago. As long as we're below 114, as long as we are above 95, I think we just continue to oscillate inside of this range. So Dow Jones, obviously it is Friday, so we can take a look at some of our weekly closes as well. But we are seeing some weakness going into the weekly close, even though it's still, obviously plenty of hours left in today's trading session. Still have about 5 hours left today. But we do see, we came out of the bearish control zone. We had a hard buy signal, got a little reflex rally, obviously immediately started selling back off. We bearishly engulfed the last few candles before that. And we are, in fact, putting in new lows. Not only did we close a new low yesterday, regardless of, basically a neutral candle, we closed a new low. So days without new low, back to zero again. So as long as that continues to happen, we're not looking for a bottom. As long as we are putting in a new low every couple days, there's no reason to think that we're not right about to just put in another new low. So, and here we see, obviously, our candle for today is pretty big and thick and juicy, nice and red. And we are actually wicking down to a new low as we speak. So not only did we close a new low yesterday, we wicked a new low today. And, seems likely, unless we get some buying coming into the end of the week, that we'll do the same thing. Typically going into Fridays, we don't often see reversals on Fridays. But what we do see is if we have weakness or strength on a Friday, we usually see continuation into the next week. And again, it's that analogy I always use. We don't run out of buyers or sellers. We run out of time. The week ends. Nobody gets a trade over the weekend. So when the week starts back up on, Monday or Sunday night, depending what you're looking at, it just picks right back up with the same price action that it had before. So if we see selling going into the end of the week, I expect continued selling, into next week. And again, there's no indication whatsoever that any of this is bottoming or that it's tired or worn out or that people are going to jump in and accumulate and carve out a bottom. There's no indication of anything like that. We literally are putting in new lows day after day after day. We're below 200 exponential and simple. They're both sloped to the downside. We're clearly in a very, very bearish bear market. And obviously, we are headed down here to our target very clearly. You can see our week. We are literally at the lows of the week. Again, this closes in 5 hours, so anything can happen before then. But it seems very likely that if we do close a new weekly close for this week, that we do once again see continuation into next week. It's not unrealistic to think we could get a bounce in some of these markets as they've been getting pretty beat down lately. But at this point in time, we are getting ready to close our 8th week in a row red. So again, this is one of the, not only a violent turn down in many markets, but it's a long drawn out turn down. We very rarely in history see 8 days of straight selling. So what has changed? Why aren't people, people are buying the dip intra week or intraday, but they're not actually, we're not even seeing a weekly bounce. So why is that? Well, obviously the bears are in control. The bulls are so beat down right now and they have zero power in the market. They're so weak that they literally can't even close a green week, let alone begin to try to carve out a bottom or indicate to the market that the bottom is in. So there's no reason to think that the bottom is even close to in. If the bulls literally can't even get a single weekly candle, there's again nothing telling me that these markets are ready to bottom. So it seems very likely we're headed down here to sub 30,000. 29,785 is 200 exponential. 29,323 is the 200 simple. And obviously we have target right down there. That's where I expect we're going. We have key supports lining up there, etc. Again, that's probably where we see our bounce over the next, month or so. We'll have to see. We'll see what it looks like. I mean, obviously markets look terrible. The moving averages are diverging. The red is getting further away from the pink. They're accelerating to the downside. We just got a hard sell signal. It is around the neutral area, but all red histograms, absolutely nothing on these charts telling us we should be bullish. And at this point in time, now when we start looking at the monthly and we think, okay, there's only a few days left in the month at this point in time, a week and a half or so. So by the weekend, we have one more week of monthly price action. Well, we're getting absolutely beat down. So unless we have some crazy week that brings us all the way back up to 32,578, which it looks like we're probably going to see continuation down, unless we have some kind of like massive bullish bounce, the 821 are going to look to cross the downside. And again, we've talked about this quite a few times. This was the Rona dump, the 821 crossed the downside. This was our 2008 global financial crisis crossed the downside. This was, after the 2000 dot-com bubble burst crossed the downside. So the last three times we saw across the downside. Even just a hint right here, like with Rona, where everything just got immediately bailed out and we just pumped 10 trillion into the system, etc. The second we see that 821 cross the downside, we know there's massive danger in these markets. And at this point in time, it seems all but inevitable. Now, again, it doesn't have to be the case, but hard sell signal, left the bullish control zone, all red histograms, below the slope line, slope is flip red. Everything is bearish on this, with the exception of the moving averages. We're still technically above the 200 exponential and simple, so that's bullish on a monthly time frame. We've never seen those flip though. And then also the 821 are still technically postured correctly, but again, it just looks like inevitability. So when we look at the daily, we look at the weekly, it tells us the monthly probably isn't going to look good. So that being said, we have the S&P. So SPY, again, just slightly overshot our target to the downside. Looks like we're going to see that continuation. No surprise here. We're currently at 386. We are getting buy, sell, buy on the daily, but we have a bunch of red histograms. We're clearly below the 200 exponential and simple slope line to the downside. 821 cross to the downside. Again, we are wicking down here. At this point in time, we're retesting the new lows. We didn't put in new lows technically until yesterday. Yesterday's close was a new low, and then obviously we gapped up again. Tried to push the upside, got rejected, and now we are bearishly engulfing. And, again, dangerously close to new lows. Obviously, days without incident, about to be reset to zero. And then SPY, again, straight down here to the 200 exponential at 361. looks very, very probable at this point in time. Hard sell signal, all red histograms, no strength on the weekly, new weekly low, potentially new weekly close after once again, this is our, I think it's 7 weeks on this one. Yeah, 7 weeks of bearishness in a row. Again, no reason whatsoever to be bullish in this market right now and to be buying the dip or say the bottom is in or we're closer to the bottom than we are to the top. Really? Are you sure? Do you have any reasons? Is there anything on the chart that's telling you we're almost at the bottom, or any indications? Are we seeing any exhaustion, divergences, anything at all? Oh, no, we're not seeing any signs of bottom whatsoever. And yet everybody is talking about the bottom is probably in, or we're close to the bottom, or I'm buying the dip, or we need a dollar cost average. All those things are what retards do. They're what retards do. You're not using your brain. You're not actually looking at the charts and using your brain to figure out what the market is trying to tell you. You're just saying, I think the bottom's in because we're down X%, and that makes me a buyer. Yay. No, that's what morons do. This is not a channel for morons. This is for people that want to grow and learn and use a system, to make money over time. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Maybe we just go to 1 million tomorrow and I'm wrong and all the dollar cost averages, people are geniuses. But obviously we see something is changing in these markets very, very clearly. Hard sell signal, left the bullish control zone, all red histograms, below the 8 and 21. The cross looks a little more dragged out than it did on the Dow Jones, but obviously the last time we saw the cross to the downside again was 2008. After that it was 2000. We didn't even get the cross to the downside during the Rona dump. It was bailed out so quickly by the Fed and the government, I should say. But obviously this is rolling over. The trend looks exhausted, and pray to God we don't get the push back down to retest the 200 exponential and simple on the monthly, because all the people that were buying the dip, they'll be wiped out by then. They'll be at zero, but that's fine. I mean, that's fine. That's okay. They deserve it, obviously. IXIC, NASDAQ. Sorry about the random time frame. So we are on the daily now, obviously in a bear market, below 200 exponential and simple, slope to the downside. Looks absolutely horrendous. Again, we did not, on the NASDAQ, this thing has been beaten down and basically looks like it just got hit by a train and it's bleeding out. It's going to die soon, but it's still holding on by a little bit. That's how it's looked for months. So that being said, we didn't put in a new low here. It's been 5 days. So that's good, I guess. But it doesn't make me like a buyer. I'm not like, oh, the NASDAQ looks great right now. No, I'm thinking, okay, these things have gotten murdered. Some of them are down 90%, 80%, 70%. Most of them are down at least, 30 to 50% minimum. So all I see here right now is, we capitulated, we got a dead cat bounce, and the bounce just hasn't completely been given back yet. That's all I see. Nothing bullish here whatsoever. The fact that we didn't put in a new low, sure, it's better, but we already hit the 200 exponential. So, I mean, we won the race to the bottom. We're already there. Congratulations, NASDAQ. You're trash. You don't make money. A bunch of garbage companies with horrible valuations. Now they're paying the piper. So does that mean we're at the bottom? We raced to the bottom. We got to the bottom. We were the first ones there. Now the NASDAQ's a good buy, right? No. Because if everything else continues to go down, is the NASDAQ just never going to go down again and be like, oh no, we're already at the bottom. We'll just wait here. And then when you guys get here in 1 month or 2 months or 6 months or 2 years, we'll just be waiting at the same price, but we're not going lower. We're already low enough. No, that's not how it works. So if we start seeing, the SPY or Dow Jones Industrial just getting absolutely wrecked, you best believe the NASDAQ is going to just start violating key levels left and right. So obviously hard sell signal, bearish control zone, all red histograms, at the 200 exponential. So we're at support, just getting absolutely beat down. Looks like complete trash. When we switch to the monthly, I mean, this is when it gets really bad. Again, obviously new lows, potentially getting ready to close at, new lows for our weekly this week again. So we're seeing just that continual meltdown. 821 ready to cross the downside. Have not gotten an 821 cross the downside since 2008. So we're talking about something that hasn't happened for, what amounts to, 14 years? So maybe it doesn't happen. Maybe we see something like this where it gets bailed out. But at this point in time, I mean, literally, we need to have the only way this doesn't cross the downside. Let's be 100% real. Let's say this monthly close, we don't see some massive, huge rally going into the end of the month. We have basically next month to get the NASDAQ back above 13,200 before this crosses the downside. And again, the last cross the downside, 2008, The one before that, 2000. Both those crosses result in a monthly retest and below, actually, in 2008 of the 200 exponential moving average. So if we see that happen, if that ends up being the case, if we end up getting this cross to downside from where we're at now, I fully expect another 42% downside in the NASDAQ. So if you're down 80% on some stock in the NASDAQ, get ready to be down, another 40% on top of that. So no, you're not going to be at negative 120%, but just get ready. Whatever you're at right now, if you had $100 and now it's worth $20, and then we go down another 40%, fully expect your investment to go from $100 to $20 and then from $20 to $12. So you're going to have a, 88% downside in that stock in the very near future. So full on, just expect that. If we get, if everything stays how it is, if everything continues. So for me right now, the most important thing for me is protect my account from, 50% drawdowns or 20% drawdowns or whatever. That's the most important thing, because I don't want to lose 50% of my account. And then it's like, okay, we went from 100, assuming we just started brand new and you had $100 in the market and all of a sudden it goes down 50%. Now you have $50. So you say, oh man, just to get back to even now, I have to go up another $50 and I only have $50. So that's a 100% increase. So the 50% down is the equivalent to 100% up, versus if you just sit on the sidelines, there's a 50% drawdown and then you just buy in. Now you didn't suffer that 50% drawdown. So instead of the first 100% just getting you back to even, now the first 100% is a dub. I mean, that's amazing. You can take your money right back out of the market and then you can leave in your profits, and you basically have a free position equal to your starting position, and you have your starting position back so you can put that somewhere else. I mean, that's ideal right there. The market basically says, here is a match on your money. Take your initial money back out of the market, deploy that capital somewhere else, and then we'll just keep that match position open for you, and that's just yours now forever. So go ahead, just toss that right in your retirement portfolio. I mean, I like that better. That sounds a little better to me. But again, it's up to everyone. You can do whatever you want. You can lose all your money over and over and over again if you want to. I mean, that's up to you. You can just buy and hold every time the price goes down 3%, until you run out of money. That's completely fine. There's tons of strategies. We're talking about an actual investment trading strategy based on trends. So next we have the Russell. Russell obviously extremely weak. Did not take out the most recent low. So that is at least, kind of a good sign. Again, just because this thing is so beat down, keep in mind the Russell has already tagged the pre-Rona dump. So January 2020, we already hit those levels. The week, we have a weekly wick from last week, but we're about to get a new weekly close unless we rally back up to the open from this week, obviously about 1800. We're already below 200 exponential. It has a negative slope. It flipped red. We're below 200 simple. It's flat, so the slope is about to flip red. So at the end of this week, basically, we'll probably enter into a weekly bear market in the Russell 2000. Again, the last time we entered into a weekly bear market in the Russell 2000 was March of 2020. And right after that, we had a massive capitulation move, far, far below the 200 exponential and simple. So, pray to God that doesn't happen again. But also though, let's probably just expect that the Russell is going to drop another 35%, because that's what it did last time. So, so from when we break down from the 200 exponential, which we already did, not unrealistic to think, we see the Russell at 1200. I don't think that's unrealistic at all. As a matter of fact, probably the highest probability. All red histograms, hard sell signal, bearish control zone, below the moving averages. I mean, the Russell looks like trash. And I mean, look at this 821 on the monthly getting ready to cross down. All red histograms, lost the slope line and has flipped over red. Hard sell signal coming out of the bullish control zone. Stochastics are obviously diverging and strengthening to the downside. I mean, what a trash index. What a trash index. You would probably be better off, investing in, I don't even know, some horrible crypto project that I've never even heard of than the Russell. They're probably equally terrible. No, I take it back. The Russell's probably slightly better. That being said, monthly just looks horrendous. This was our, 2020 dump. This was our 2016 cross and dump. This was our 2008 cross and dump. This was our 2000 cross and dump. So again, every time we saw this take place, with the exception of our outlier here in 2016, every other time it came down and tagged the 200 exponential and simple. So again, if the Russell decides to capitulate like the garbage that it is, if the zombies start coming out to play, expect $1,200 on the Russell. I mean, that's what the market's telling us. That's what the chart's telling us. That's what, the market makers are saying. They're saying, hey, the Russell's going to 1,200 unless something changes. And are we seeing any changes? No. So see you at 1,200, Russell. XLE is next. Energy obviously popped up, hit our target. So we finally have hit the completion target to upside. Does that mean all of a sudden we're going to go down? No, not necessarily, but we have been watching this divergence here. We talked about how we are kind of ignoring this peak right here. Sure, we're cherry picking data, whatever. It doesn't matter. We're just considering this as part of the larger move. So at this point in time, we have a high, we have a lower high. Arguably, that's another lower high. And then we have what's amounting to a fourth lower high now as well. And again, if we line those up, that's our first peak. Here's our higher peak. Here's our third higher peak. Here's our one that we're going to ignore. Was a fourth drive of bearish divergence, but now it seems like it's more part of this move right here. So at this point in time, we have either 1, 2, 3, 4 peaks, or 1, 2, we could ignore this one if we want also, and then just pick 3 peaks. Doesn't matter. We see some clear bearish divergence taking place on this chart. So with the exception of this peak right here and this little move, that happens very, very often where you put in another drive of divergence, it comes down and then actually takes that out and invalidates this drive of bearish divergence, but doesn't actually invalidate the actual trend of bearish divergence. So when we really look at it, we really have a very clear 1, 2, 3 drives of bearish divergence. We could argue a fourth drive of bearish divergence, but again, XLE looks tired. I mean, this is a crowded trade with some clear bearish divergence. Not looking to get stuck in this. Still very bullish, obviously, but XTN, transportation at the lows, new lows, getting ready to close out the week at new lows. Obviously, extremely, extremely weak, operating in this descending, depending how you draw it, channel, or in my case, a broadening wedge. Retesting 200 exponential on the weekly, where our target's slightly below this at like $68, but obviously transportation looks horrendous, and that is the first of the 4 horsemen, riding in, letting us know that we should expect the market to completely melt down, which is what's been happening, and it's been telling us that for a while. So XLF, financial sector, obviously trash. Anyone that's been telling you financial sector is good because rates are going up and all this blah, 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 they're obviously morons. They don't understand how the markets work. They don't understand the economy. And, that's been obviously very clearly proven at this point in time, as we just basically saw financials just get absolutely wrecked. Another 20% down, new lows, getting ready to close at new lows. Momentum to the downside. When we switch over to the weekly, again, we see a complete meltdown taking place, almost to the 200 exponential and simple, getting ready for a new close, slightly off of the lowest wick. But again, just week after week after week after new close, new lows, just absolutely horrendous. So slightly above our support, that would put us basically at the pre-pandemic dump levels. So now we're starting to see a trend here. What is that trend? A lot of these assets or sectors in the market are retesting their previous highs before the Rona dump. So anyone that's been in the markets for a while or studied the markets for a while or, has a brain and knows how to use it and not listen to the mainstream, propaganda, everyone knows that going into 2020, the markets were already extremely weak. They were already extremely weak. There was every recession / dump indicator was flashing for a top. Obviously, we predicted that perfectly, literally nailed it to less than 0.5% on like the downside for Dow Jones and S&P. And that was the quote unquote black swan event that no one could have ever predicted or seen. Somehow our strategy identified it clearly, picked out the bottom, and absolutely nailed it. So that being said, now we're retesting those levels. So there's an extra like $10 trillion in the system floating around. There's like no extra goods because we've actually been producing less goods and services. And then somehow that $10 trillion is gone now. It did nothing for the economy because we're right back to where we were before it started. Now, granted, the $10 trillion started coming in towards the bottom, so maybe we have to go lower. But, I mean, at this point in time, I'm not ruling out a retest of the Rona lows because we didn't fix anything. If in the words of Peter Schiff, if you just get shot and then you say, oh my God, I've been shot, and your buddy says, oh, no problem, I can fix it for you. And you're like, really? You can repair bullet wounds? And your buddy's like, yeah, of course. I mean, anyone can, right? And pulls out a Band-Aid and puts the Band-Aid on your bullet wound and then says, you're cured. I mean, did we fix anything? Or did we just literally cover it up? So now the blood's not gushing everywhere. It's probably gushing inside your body now, which is even worse for you. You're probably better, letting it just bleed out, go to the hospital as quick as you can. I don't know. I'm not a doctor, but I know a Band-Aid doesn't fix a bullet wound. So that's what we did. We didn't fix anything. We didn't change anything. We didn't say, oh, we should cut down on deficit spending. Oh my God, we need to raise taxes. Oh, we need to do this. We need to do that. We didn't do any of that stuff. We didn't change anything. Nothing changed. Rates are still at zero. There's nothing. So why would we not just now see the repercussions of our actions? So I would not be surprised whatsoever to see this fully just melt back down and retest these lows. And what is a retest low? Well, I mean, it's just really a retest at 200 exponential and simple. It's just a reversion to the mean. It's just going from overvalued back to fair value. Maybe we even go undervalue. But I mean, it's not that hard to believe. So XLF, financial sector, looks like trash. I mean, I think this sector is ripe for disruption as well. I mean, you don't have to love like, PayPal or crypto or whatever, random disruptor there is out there, but you have to acknowledge them. You have to know that there's something going on here. Now, again, if you're like some of these big banks or, credit card companies or whatever, you're not just going to sit by idly and just let your business go out. You're going to obviously do whatever you can to try to adapt. But the truth is, a lot of times if you already have, an infrastructure built or something like that, and then you try to adapt, it's going to cost you exponentially more money than a new company can just come in and start from scratch. So I'm not saying that's necessarily the case here, but it's definitely at least partially the case here. Like, if you have a bank and you have thousands of locations around the country and all these like fixed costs and everything versus somebody else and says, oh, we're not even going to have a physical location. We're just going to have like 3 people running like customer service and like tech behind the scenes and no actual location or anything. I mean, which one of these companies more likely to grow, potentially succeed, aka steal market cap from the other? Obviously the one with no fixed costs, extremely low fixed costs, especially in an inflationary environment. So so that being said, financial sector looks like trash. Hard sell signal, bunch of red histograms, lost the slope line, red slope now. I mean, 821 getting ready to cross the downside, new lows on the chart. I mean, at this point in time, we're expecting $30 on this thing. And then after that, probably 24 in the near future. These markets look absolutely horrendous. I know I've been saying this for a while. Granted, we have been going down for a while everybody else is saying buy the dip and it's not over and blah, 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 blah. The fact of the matter is these markets literally are looking worse by the day. We're losing key levels nonstop on these markets. They look terrible. XLV on the daily. I mean, these healthcare is sitting on support. So, we're not at the lows. We are technically in a bear market now. We do have some green histograms and a hard buy, but doesn't look good. Doesn't look good. I mean, we didn't just put in a brand new low, but, maybe on the weekly, we're getting ready to potentially, maybe next week, I don't know, 126.83, something like that. This looks rough. And again, we see 1 drive up right here, 2 drives up right here, 3 drives up right here, each time a higher peak. And then we go down here and look at our indicator oscillators. We see a highest peak right here, a lower peak, and then a lower peak. This one, obviously, like we were talking about before, we're ignoring because we just assume it's part of the move down to get to this peak. So again, 3 peaks, each lower, 3 peaks, each higher, bearish divergence. If we look at our stochastics as well, look at the jewel, obviously a high, a lower high, and then a third lower high. Again, triple bearish divergence on the weekly XLV chart. Healthcare looks like it's ready to capitulate. So we're at support with triple bearish divergence that looks like it's ready to play out. So where does that take us? Well, the breakdown probably takes us to that 110 level. So that's what I'm paying attention to. Obviously looking like some sort of topping pattern. We were talking about a potential head and shoulder or something like that. At this point in time, the 382 seems like a likely target. And 200 exponential and simple moving average on the weekly. But again, looks just absolutely horrendous. Barely just hanging on for dear life. XLU utilities hanging out at these levels, still hanging out between our resistance and support area. Nothing crazy going on here. This one is holding up obviously much better than others are. These are supposed to be the safety sectors. XLV, XLU, XLP, XLRE, and potentially just anything with dividends. Does not mean they're not going to go down. It just means they're probably going to lose less percentage-wise in comparison. But I do fully expect them to continue going down. So XLP now, obviously we saw a massive capitulation on XLP, consumer staples. That was pretty much because of, like the recent Walmart fiasco, which again, we'll talk a little bit about Walmart fiasco, Home Depot and, what that is, the broader implications on the market. But we have broken down from support. We're back at the heart line of the channel. Again, it's like, oh, if you loved, if you loved XLP at 81, or you liked it at 81, you should love it at 70, right? Well, sure, unless it goes to 50. I mean, let's not just assume because something sells off, 20% or 50% that's the bottom. Just be, it was this much. So now it's down 50%. What a great deal. Sure, unless it was already overpriced by 300%. So when it's all said and done, we're losing key levels. We're at the heart line of the channel. Obviously, the channel played out for quite some time. We're coming down to like that $68 mark. Absolutely just beat down. But the move happened so quickly and so violently that I'm not even like trying to rush in to buy the dip on any of this stuff because it probably just continues to see continuation. I mean, look at this weekly candle. This is I think this is the worst weekly candle we've ever seen in history. I mean, I can't even find. Is there a weaker candle in here somewhere maybe? Maybe we have one worse candle. I mean, this one had a big wick at the bottom, so I guess this one's probably worse from 2008. So again, we're seeing similarities to stuff that happened in 2000 and 2008, and yet no one seems to respect that at all. And then on top of it, we have record debt. We have, ridiculously high inflation we haven't seen in 40 years, and yet everybody says, well, it'll just be the same as last time. Everything's fine. Sure, okay. Sure. XLRE, so real estate, obviously, putting in new lows at the new lows right now. Again, trying to build some strength, but bearish overall, under the 200 exponential and simple. We can see how many of these charts are under the 200 exponential and simple with the negative slope, and you can just tell my overall mood and, inclinations as to the direction of the market. Well, we're in a downtrend, so I think we probably continue to go down. That's my guess. Again, back here on real estate, revisiting the February 2020 levels. So that's strange because what other similarities do we see to 2020 levels? Well, was the real estate market priced this high in 2020? No, it's completely melted up. It's up 30 to 50% in most places from then. So is this a bubble inflated by the Fed because they were buying mortgage-backed securities? Or are houses just all of a sudden now, because of inflation, worth 30% more? I mean, you have to decide for yourself, but I would say it's probably just a bubble that was already a bubble that the Fed inflated to make an even bigger bubble. And yet somehow rates have gone from, what amounts to like a 30-year fixed 3% to 5% or 2.5% to 5% in the last couple of years. Prices are still extremely high. And yet here we are back at our pre-Rona dumps right here. So something's not lining up. Either the actual real estate market needs to go down a bunch in real life to make up for the higher rates, to make up for these ridiculous valuations and lack of affordability for, most people, versus the alternative is, well, we're just undervalued right now and we should still be much higher because obviously this was all organic, normal growth and, obviously we should just be much higher. So which one seems more likely? Well, I mean, we're seeing that everything the governments did, everything the Federal Reserve and, the central banks and various governments around the world did, we'll just focus on the United States because we're the world reserve currency. Everything they did, sure, it helped. Sure, it saved the, quote unquote economy, aka, stock market. Sure, it saved the consumer, whatever. But did it actually fix any of the problems? Did anything get any better? Or should we just automatically assume that because nothing has changed and we're right back where we were before all this happened, that probably, well, I mean, if imagine we're back here again and all of a sudden we start selling off or whatever, what if the Fed didn't step in? What if monetary and fiscal policy didn't save us? Where would we be? Probably much lower. So they did save us and they pumped us up into a bubble and now the bubble is coming back down and we're right back where we started. So now that we're right back where we started, does that area hold? Is all of a sudden everything better and just goes further to the upside and now everything's good? Or do we just prolong the punishment? Did we just prolong, the negative effects because we didn't want to deal with them at the time? So we quote unquote kicked the can down the road and now it's time to pay the piper. Or maybe we kick it again. Who knows? But what I'm seeing on these charts, what I'm seeing, on every single one of these sectors, every single one of these indexes, I'm seeing extreme weakness. on a daily and weekly time frame as well. So that being said, we'll jump in on the DXY. So DXY has had a pullback. It is slightly below the 21. Definitely seeing the weakness that we've been expecting. Hard sell coming out of the bearish control zone. Bunch of red histograms, lost the slope line. Everything we are expecting and have been anticipating is playing out perfectly. So we're basically seeing a pretty big red candle here on the weekly. First red histogram on the weekly. And again, we are still inside the bullish control zone, but stochastics are starting to roll over. I fully expect a retest of our breakout level. So, you know, we broke out from like that 102 level. That was our previous close right here on the weekly. We're basically at the previous close level from 2016 on the weekly. So I would expect us to find some kind of support in these levels. 200 exponential getting ready to cross over the 200 simple on the weekly. This chart is extremely bullish. And again, when we switch out to the monthly, you know, we do have a quote unquote potential topping candle or rejection of higher prices. Arguably, depending how this closes in the next 2 weeks, I will have a better idea. But we did just cross the green histogram over the slope line and the zero line, flip the slope line over blue. We are very much inside of the bullish control zone. We have the 8 and 21 crossed correctly to the upside. We're above the 200 exponential and simple, and they are both angled to the upside. We just put in, you know, arguably one of the most bullish monthly candles in existence on the DXY. Nothing tells me right now that we're just going to have a blow off top and this is just going to stop and that's it. It looks like we basically just had a breakout. After the breakout, we saw a little continuation. We're coming back down to retest our what was resistance as support to make sure that it holds. And then if these levels do hold, I expect much further upside potential on the DXY. But I mean, it is what it is. No surprises there. We've been saying the same thing on DXY for months, and it's been playing out for months. So Tesla, so again, new low. We were paying attention to this recently and talking about how it was very important not to take out that low, but it was just a matter of time. So now here we are at 665. So Tesla back in the 600s, lowest price we have seen in quite some time on Tesla. I do very much expect Tesla to be back down here, retesting that support and the 236 macro at 536. So another $130 off the top. Just a little haircut for old Uncle Elon. No big deal. Clear, strong support right there. And that's also a macro 236 from the Rona dump. So when it's all said and done, I do fully expect that level to hold at least temporarily and get an aggressive bounce from 533. I will probably be scalping Tesla because when we do get down there, I'm expecting probably a retest from the 236 back to around where we're at right now. So it should be a roughly 30% move back to the upside. It'll be a nice scalp. And then who knows, that might even develop into like a real position over time. We might hodl our Teslas. ARKK, obviously massive trash, had a capitulation dump a few days ago. Now just kind of hanging out these levels, trying to build some momentum. Left the bullish control zone, bearish control zone, sorry. Hard buy signal, a bunch of green histograms, blue slope line. It's trash. You know it's going lower. You know, it is what it is. New weekly close, looking like it's coming down. We had a pretty big rejection of lower prices and tried to like put in a bottom right here. But, you know, that was really just capitulation and just, you know, everything's down 90% because CATHIE wood is trash. So you're like, oh, I guess we'll just buy this up. We'll buy the dip. It's already down 90%. Can't go down any lower, right? ARKK, just absolute trash. Buy, sell. I would expect a buy signal at some point in time in the future as we carve out a bottom. But again, look at this. Look at the weekly chart here. We're talking about a bunch of things coming down and touching the 200 exponential on the weekly or 200 simple on the weekly. This thing has blasted through the 200 exponential and simple on the weekly and has literally raced everything else to zero. And I mean, it's winning. It's winning. CATHIE wood, if you literally just pick the opposite of CATHIE wood, you'd be absolutely crushing it because she's obviously a moron. So back to January 18 prices at this point in time. So at this point in time, she has completely wiped out over, you know, what, 4.5 years worth of gains. So, I mean, what's her time horizon is 5 years, she always says. We have a 5-year time horizon. Well, what is your goal in that 5 years? To just be even? Because you're almost there. You're almost back to even. Everybody was talking about her overperformance. She has officially underperformed the major indexes at this point in time over a 5-year period. She has literally lost billions and billions of dollars for herself and other investors as well with her horrible strategies and, you know, brain dead actions. And you say, well, that's not true. She's right back to even, right? Well, what was the size of ARKK in 2018? How many hundreds of millions of dollars were in that fund? or how many couple $1 billion were in that fund, versus up here, you know, when it was peaking, how many billions of dollars had flowed into this fund. Because if this fund was 1 billion right here, and then it was 50 billion right here, and the people that had, you know, that put the 1 billion in saw the price go up from, you know, 1 billion to up 238%. So they're like, oh, now we have, you know, instead of $1 billion, we have, let's say, roughly, you know, $3 billion. You're like, that's great. We made $2 billion. And then by the time we get up here, the fund is valued at $50 billion. And then it loses, you know, and again, these numbers are just made up. I don't know the actual numbers off the top of my head. Loses 73%. So it was worth $50 billion. And now it's worth $12 billion. So here she net lost $30 billion for investors. Here she net gained $2 billion or whatever for investors. So the exponentiality of the losses that CATHIE the failure would has, you know, put on the market is unbelievable. I mean, I don't know that there has ever been, at least, I mean, I don't even know. I don't want to single out women on this one, but I'm not sure there's ever been an ETF. I'm not sure there's ever been a woman that has ever lost this amount of money in this amount of time and still just stuck to their guns and said, we just have a 5-year time horizon. Well, it's been 5 years and we're right back where we started. So, well, 5 to 10. 5 to 10. I mean, what a trash bag person. I mean, what the hell? How can you be so wrong and just pretend? I mean, obviously, you know, that's your job, that's your money, that's your reputation. So you just lie. You know, that's what people do now. They just lie and pretend like things are good. But that being said, ARK, trash, obviously. One day it will be good, but will that be in 10 years? Will you have any money left? Will you have been liquidated? Will Cathie Wood have ran off with the billions of dollars, you know, in fees that she collected on losing your hundreds of billions of dollars? Probably. NVIDIA, again, new lows. You know, it's down here at the lows. Getting ready to close at the lows. You know, I don't see any signs of bottoming on this. This is obviously a proxy for the semiconductor space. One of the strongest. Looks very, very weak right here. I do fully expect it to be down here at like 140 in the very near future. Obviously, the 618 level didn't hold. That was our stipulation to enter a long position. Obviously, we never got that situation to play out because we couldn't actually hold support. So do fully expect lower lows on this. Yeah, semiconductors looking weak. Obviously, they are very cyclical. But at this point in time, you know, obviously one of the horsemen as well. So we see signals coming from all these various markets that we're expecting a 2000 and 2008 type downturn, possibly worse. All right, so on to Apple. Apple at 137 broke down from key support, putting in new lows, you know, already at new lows, probably looking to go much lower. This is the darling of the market. I mean, we've hit our target to the downside perfectly. This is where we were expecting to hold. Is it going to actually hold or not? You know, it probably does, honestly. It probably does. I think there's enough people probably buying into Apple at these levels. But realistically, I think over time, we see this down at like 115 or something like that. So still looking for the low price target and the weekly 200 exponential / simple potentially to get retested somewhere down in this region. We'll have to see. Don't want to get overly bearish on Apple, but again, you know, all weakness, you know, new lows, breaking down. I mean, 821 have crossed the downside on the weekly. You know, even Apple looks terrible right now. Google, same thing, headed down to our $2,000 target. Well on the way at the 382. So that is fully what we're expecting. Looks absolutely terrible. Absolutely terrible. Google, if you're listening, you're great. Yeah, I mean, that's right around 200 exponential, 200 simple, slightly lower at the 0.5. Just complete meltdown. All these markets are just completely melting down. I don't know how people can legitimately look at these charts and say that the bottom is probably in. We're closer to the bottom than we are to the top. You know, the bear market's probably over. Everything's pricing. I don't know how people can even say these things. They're obviously like made up fantasies. Buy, sell, buy on the daily for Amazon at support. We did hit our $2,000 target. We're continuing to just melt down a bunch of green histograms on the daily, but we're not seeing any actual price movement. So we did hit our target perfectly, obviously. In between the 0.5 and the 618, we were holding the 0.5 temporarily. We did get the measure move of the breakdown of the channel. Below the 200 exponential and simple on the weekly. 200 exponential has rolled over bearish. 200 simple is flat slightly angled to the upside. We're now retesting key support though from 2018. So again, very, very important levels to hold, as we saw that act as resistance in 2018, and then we saw it act as resistance in 2019, and then again that was basically our top right before that Rona dump, and we're at that support level now. So while we would expect or hope that this support level holds, would not be surprised to see this go down to the Rona lows. Anything that's already touching the top of the pre-pandemic highs at this point in time, if it breaks down from that level, I fully expect it to just revisit the lows. Because, sure, there's a bunch of price action in between here. Sure, that's fine. But when we lose a key support level, everybody looks at what was the next key support level that actually held up. So if we lose this resistance as support, we're going to look at our next previous support, which was the low from the dump. Very, very bad. Very bad. These markets look absolutely horrendous. Microsoft is next, breaking down from our head and shoulders pattern. The majority of the measure move, well, I shouldn't say the majority. Good deal of the measure move is already priced in. We are headed lower, 252 at this point in time. Looks like we're headed to that 382 target, probably 0.5 over time. Well below 200 exponential and simple, clearly in a bear market. We see a very clear topping distribution pattern taking place in our head and shoulders. Again, new weekly lows, new weekly low closes. Nothing good going on in this chart. And again, remember, these are the best charts that we've had for, years now. The Microsofts, the Apples, the Amazon, not really, Google, some of these are like, NVIDIA, top performers, big market cap in the major indexes, and they are just completely melting down right now. So we saw all the trash melt down first, and now we're seeing like actual decent companies melt down as well. Speaking of trash or decent companies, or a combination of the two, we have Walmart. I think Walmart is a perfect gauge of the, consumer at, the lower end of the spectrum, or just regular people that are forced into the lower end of the spectrum. Not hating on Walmart or anything, not talking trash about anyone that shops at Walmart. Obviously I have shopped at Walmart many times, but let's be real. If you've ever seen the people of Walmart, the website, it's absolutely hilarious, and I think perfectly embodies, Walmart. And as the consumer ends up in worse and worse place, I think we'll see them shopping more at Walmart and less at Target, more at the dollar store and less at the grocery store, etc. type thing. So when we see this complete meltdown in Walmart over there, basically like forward guidance, and their slogan is obviously everyday low prices. So if they're going to start having to pass down pricing to the consumer, if they're seeing consumers buy off brands or house brands, if they're seeing, stress potentially going into the future as far as like their earnings or profitability, I think that's a, who buys stuff from Walmart. It's not companies, it's not businesses, it's not the government. No, it's just regular people. And usually those regular people are the type of people that get a paycheck and then spend it. So, and again, not hating on people for being poor or anything like that. I'm 100% not judging people. We're using this as a gauge to what's happening. It's horrendous what the governments and, politicians and, crooked people on top are doing to this country and this world. But the fact of the matter is, we still have to acknowledge it. And what we're seeing is, obviously, Walmart is scared. And now the market's scared because Walmart's scared. And why is Walmart scared? Well, because, they rely on the consumer. So if the consumer's strong, if everything Wall Street and all these analysts were saying was true, why is Walmart scared? They're just dumb. They don't know how to run a business. Right? Right? No. It's because Wall Street's morons and they're out of touch with reality and they don't realize what the real world looks like right now, in my opinion. So that being said, Walmart complete meltdown, just looks horrendous. Literally just putting in new daily lows. Look at that big, juicy, thick red candle. If that doesn't tell you bullish, buy the dip. I don't know what does. I could see this thing just double, triple, quadruple in size and Walmart just go straight to zero. I'm just kidding. It will never go to zero. But regardless, that being said, we could look back at some of these key levels for support. Obviously, we're looking at that 2019 top at this point in time. We have completely wiped out, like 3 years worth of gains. And we're probably headed down to some of these other support levels. I think it's important to put in, obviously, our Fibonacci from we did the 2018 low to the current high. Arguably, you could do one Oh, I think we did both last time. Yeah, I think I discussed this actually on the channel last time. So yeah, we have one from the 2020 low, and then we have one from the 2018 low. And you could argue it goes either way. You could even argue, honestly, that we should be going from our 2015 low, and we can see how that like corresponds as we get to it. I don't know that that would be any more like clear or look any better. I mean, we just don't have enough price action right now because we just have one giant red candle. We need to see where this closes at the end of the week. We need to see some kind of further price action and see what levels we're respecting, because we're respecting the 236 and the 382 here, and then we just completely slapped them in the face. And we shot through the 382 in white, we shot through the 618 in yellow. So, you know, assuming that we continue to just sell off, I would say probably around like 113 is our target. But when we look at this weekly here, we're literally about to get the cross on the stochastics. We just left the bullish control zone, so we're about to get a bear cross, bunch of red histograms. I mean, it looks terrible. Looks terrible. I mean, obviously. So again, we see a failed breakout or throw over from, you know, a channel we were trading in. So once again, clear Wyckoff distribution taking place. Clear Wyckoff distribution taking place. And yet somehow people don't see this stuff or don't understand it or don't care. I don't know. I mean, you got to care. Nobody wants to lose 30% overnight. So we didn't talk about this really, or maybe we mentioned it in the last stream, but obviously Target. So we saw a similar move from Target. Target's kind of weird because they sort of fall in like the gray area between consumer discretionary and consumer staples. So you could argue obviously that they're more of a discretionary, or you could argue that they're more of a staple. And I could agree with you on either of those points, but I like them because they kind of gauge the two. And what I mean is that a lot of people, if they're doing okay financially, will shop at Target. But if shit hits the fan, they're going to Walmart or Aldi or the dollar store or whatever. Let's be real. So Target is good when people are doing okay. But once people start to suffer, Target, I think, suffers a lot more than a company like Walmart or a dollar store or something like that. Because they're sort of like a premium version of the same product or the same store or whatever. Like, if you don't want to see crackheads in pajamas while you're shopping, you know, you go to Target. If you don't care or you don't have a choice, you go to Walmart. And that's okay. And you might go to Walmart and not see crackheads shopping in pajamas. Unlikely, but it's possible. You might go to Target and see a crackhead shopping in pajamas. Also possible, but unlikely. But that being said, I think this is a good gauge for us to basically, you know, tell what's really happening with consumer discretionary, what's really happening with consumer staples, and then two similar companies that operate on sort of like different ends of the same spectrum. So that being said, again, Target was a massive outperformer on the whole way up and has been absolutely killing it. You know, lost to 200 exponential and simple, retested it, put in a lower high, and then we see the capitulation. Very clear signs that we were probably headed much lower. The fact that the 236 did not hold up tells us we're probably going to the 382, and you know, this thing is just playing catch up. So we will see what happens. But again, you know, at this point in time, it's just, when we go to these weekly charts, you can't do anything with this. We shot straight to the 200 exponential, tags 200 simple. You can't say, okay, that's probably the bottom. There's no signs of a bottom. You know, could it be the bottom? Sure. But overall right now, I mean, I just fully expect these things to continue melting down. And I think this speaks to the overall health of the economy and, you know, the actual consumer. So if we see Walmart start to strengthen, or at least like consolidate, and we see Target continuing to sell off, you know, it probably has to do with the consumer, you know, and their overall condition. And again, maybe we should start looking at the dollar stores or something like that. So, but yeah, we'll jump into crypto and our commodities here. Let me jump in chat real quick. I know a lot of you guys are sounding off. Good to see everybody today. If you are listening, watching, enjoying, make sure to smash up that like button. Make sure you are subscribed. So Rakid Soto says, hey everyone, what's up, Soto? Craig Mans says, hi everyone. Good to be here live. Good to have you, brother. Trader Billy J, what's up, brother? Good to see you, man. Scotty Scotsman says, hey, y'all. Actually, he said, hey, all. I said, hey, y'all. Scotty says, I'll watch Tone Vase later. Oh, man, is Tone still around? Holy crap. Damn, I haven't seen anything from Tone Vase in literally years. I mean, it's probably been, I haven't even heard that name in probably 2 years, man. I just assumed that, I mean, he either went broke or hit it big, but one way or the other, I haven't heard anything from him. That's crazy. I forgot all about that guy. So Cool Sheet says, I got a Bitcoin order set at 22,222. I'm guessing your favorite number is 3. No, that's not it. Maybe 2. Cool Sheet says, still shorting all the way down. Andreas, what's up? Andreas says, what's up? Guess we start next week with a big dump. I mean, it sure looks like it. If, we see this continuation through the end of the week. And then poop emoji. I don't know why it made me laugh. I guess I'm a child. Big D. He says, and I'm free falling. Andreas says, dip enough. I think we can go dipper. All right, so let's jump into our cryptos. Obviously, we see you guys are having a good time over there in chat. Honestly, though, it's hard not to have a good time when the markets are just getting absolutely wrecked. You're looking to be a buyer of said markets at some point in time into the future, whether it's in, a day, a week, a month, 5 years, whatever it is, or over the next 20 years. But the fact of the matter is, man, I mean, unless you're one of these fools that got tricked and, has a bunch of upside down positions. I mean, if you're watching this video right now and you've been around for any amount of time, you're probably absolutely killing it in these markets. So it definitely feels good. Or even if you're just sitting on the sideline with a bunch of capital ready to deploy. I mean, over the last, year now, we've seen a lot of these assets go down 25, 50, 75, 90%. So we literally get to buy anything we want basically at 25 to 90% off. Maybe another 25 to 50 on top of that. I mean, I love sales. That's great. I couldn't be in a better mood. If anything, sometimes you get a little bored of waiting because you're like, I kind of want to deploy some capital eventually. Like, what's going on here? But do remember, if you're just tuning in, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. All right, so let's look at our Bitcoin futures chart. So we are revisiting the lows. We have a slightly lower low down here a couple days ago at 28,240. In my opinion, we're so close to the lows, it doesn't really matter. We're seeing what amounts to a bearish engulfing candle. Does not look good. Do not want to see a new close on the weekly. I mean, we don't want to see a new daily low close. At 28,240 was our previous one. And then when we go out to the weekly, it's too late at this point in time. We have a new weekly close last week, and it was lower than any previous close. And now it looks like, basically, we have 5 hours to basically rally up above 29,895. Or else we have another new weekly close, which isn't that big of a deal. I mean, it's just one more in a series of 8 weekly closes, 8 weekly red candles, maybe the most we've ever had. So when it's all said and done, where do we go? 200 exponential, slightly lower. Finish closing the gap, probably 24,000, seems likely. Potentially as low as 21,825. All red histograms, red slope line, hard sell signal, stochastics angle to the downside, 821 angle to the downside, diverging from each other. I mean, Bitcoin looks terrible. Looks horrible. It's trash. Still see bearish weekly divergence, still see bearish monthly divergence. I just don't see any reason to get bullish on these markets. If anything, I think it's just a matter of time before a bunch of the brainwashed crypto heads capitulate. I really do. I mean, over 50% of crypto owners now are upside down. I mean, how pathetic is that? Over 50% of people that have ever bought cryptocurrency are negative. Wow. I mean, that is pathetic. And we're going through a massive distribution period. So what if we do get the sell-off to 20K or 12K? What percentage is it then? 70%? 80%? What percentage of the people that are even counted, as being profitable are actually people with access to this crypto and not just some old Bitcoin that got thrown away or lost the keys to, or I mean, it's crazy. We haven't even had our capitulation moment. We're still at support and we're only back at 2021 levels. We're back at January 2021 levels. So that means over 50% of crypto wallets bought crypto in the last year and some change and are negative. I mean, how is that good for like the future of crypto and sustainability when half of the people using a product? Imagine if, you were, I don't even know. Let's say you had a widget and, what do we want our widget to be? Let's say it is let's say it's a razor, okay, that you shave with, a shaving device, a shaver blade, a shaver razor blade. So let's say that, you have this company and you're going to sell these razor blades to people and they're going to shave with them. But like 50% of the people that buy this razor blade end up like accidentally slitting their throat and like bleeding a lot or maybe dying. Like, is that sustainable for your product? You think your product in the future will sell a lot more razor blades because you're like, oh, it's only a 50% chance that you're a loser and, bleed to death, probably die. That's not good. Well, that's crypto. Crypto is a razor right now, slitting everybody's throat. So for me, does not bode well for crypto. I mean, this is just horrible, horrible distribution, double top taking place. And when the actual capitulation move comes in, if it comes in, it's going to look horrendous. There's nothing even to talk about on Bitcoin anymore. There's nothing to even talk about on crypto. I mean, we came down here, we tagged the 200 exponential. We're on the weekly. We're putting in new lows. I expect us to continue putting in new lows. We've talked about our targets 100 times. We've been hitting the targets one after another. No sign of anything changing. So crypto is still trash. Correct. And keep in mind, this is coming from someone who loves blockchain technology and cryptocurrency. But chart-wise, investment-wise, purchase-wise, crypto is trash right now at this moment in time. We'll take a snapshot. Crypto is trash for now. Ethereum, didn't quite come down to those low levels. I mean, it wicked down to them, but didn't quite go down. So technically it looks a little bit better, but again, still just looks like trash. Looks like it's getting ready to put in a new daily close, potentially a new weekly close. Front ran the 200 exponential slightly, 200 simple slightly lower. So, $1,600 to $1,200 the targets on Ethereum. No sign that we don't go there. Everything just tells us that these things will continue to just melt down. Bitcoin dominance, we got our triple bullish divergence breakout of the channel. Now this will go over the weekend. So we technically have 3 days to close the weekly chart on Bitcoin dominance because it uses spot market, not futures. So all we want to see is just this level hold up outside of the zone. And then after that, we expect continuation. And if we see Bitcoin gain a sudden 7% in market cap, it's probably because altcoins got wrecked. So if we're correct, Bitcoin is getting ready for a capitulation move. Based on the charts, though, not just like fun or, guesses. Total market cap on the weekly looks very much like the Bitcoin chart, almost exactly still. We might as well just not even look at this and I'll just look at the Bitcoin chart a third time. Matic continuing to melt down. Did not quite come down to its recent low from a couple days ago yet. But, obviously in a bear market, when we look at the weekly, it just looks absolutely horrendous. 821 have crossed the downside, just melting down. This is the beginning of the bloody waterfall when we just continue to just get bigger and redder candles and they just continue just melting down. And we're just, it goes from like 3% drops to 10% drops to 20% drops to 0. Looks horrendous. Bears are clearly in control. None of these altcoins are going to do anything unless Bitcoin does something. And whatever they do, they're going to do it probably worse at this point in time. So AVX, Avalanche, AVAX, again, just completely melting down. Couldn't get that close above to get a potential entry for that scalp play. Putting a new low, at a new low currently on the daily for a close if we close right now. Weekly close, I mean, just completely melting down. Just absolutely horrendous. I mean, anyone that's even looking at these charts and saying, I think I'm going to buy some, is not using anything. They're not using anything. They're not using any part of their brain. Or they're just, whatever. I mean, you want a dollar cost average into a downtrend? Sure. Continue to just be a loser. And maybe 2 years from now, you'll be like, see, it worked. Sure. Okay. That's not how we do it around here. Not taking 40%, 50%, 70% drawdowns. Not going to happen. It literally will never happen. Solana, well, I shouldn't say literally never, but we'll do everything we possibly can to make sure that never happens. So Solana just melting down again, down to the 786. Not quite putting in a new low on the daily, but again, weekly chart, just complete meltdown, just new lows. We see these big wicks at the bottom and people are like, it bottomed. That was a rejection candle of lower prices. Now we're going higher. No, it was just a dead cat bounce, a reaction rally. People saying, well, it's down so much, we'll probably be able to scalp a couple % on the bounce back up. XMR, Monero, again, trying to act stronger, but losing the 200 exponential and simple was crucial here. As soon as it lost those levels after rallying above them, it was very clear that this is going much lower. So we did get a buy, sell, buy, nice move back to the upside, top of the range. And now this is the area we were talking about for a potential short, back down towards like the bottom of the range or new lows. What do you do? Just re-enter the same trade again? I mean, probably. It looks like trash. Holding up okay for now, still technically holding up, some form of a rounding bottom for a cup and handle, but I do fully expect this to go lower. And you know what? The last crypto I'm going to be stuck holding is probably like XRP or Dash. But the second last crypto is, these privacy coins, because the government's getting ready to crack down on crypto. We know it all around the world. And you don't think they're going to crack down on privacy coins? All they care about is your privacy and making sure you don't have any of it. So, of course, they're going after privacy coins. Algo is next. Completely just melting down, new lows. I mean, guys, let's be real. I don't mind looking at these requests for you guys, but I mean, it's just another crypto that's just completely melting down. So at this point in time, look at the Bitcoin chart, see what Bitcoin's doing, look at the stock market. Until we see a change on one of those things, these trash cryptos are just going to keep melting down. So here is the XRP for you XRP lovers. We did hit the 382 target to downside. But again, it doesn't just mean we hit the target and now we're going up. It just means we hit our next step. We just took the next step down on Slinky theory. And after that, what do? We take a next step down. So do we go to the 236 next? Are we going to 25 cents next? Yeah, probably eventually. Holding up at 40 for now. Do we get a retest first to 52 and then we go to 26? Probably. I mean, we'll see though. XRP, I mean, there can't be anybody left by now. I think most people have either quit or, I imagine you can't look anymore if you're an XRP buyer. Everybody else crushed it this whole bull market. And you're this XRP guy who like never even got back his 2018 previous highs. So is XRP trash? Yeah, I would say so. I mean, you could have bought, let's say you're the worst person ever and you bought at the exact top in January of 2018. I mean, right now you're still down from your January 2018 highs. You're down 87.74%. Why would anyone ever buy XRP? Why would anyone ever invest in XRP? Why would anyone ever believe in XRP? They wouldn't, because it's trash. They wouldn't, obviously. I mean, just from this cycle high in 2021, you're down 79%. I mean, how trash of an investment could you possibly ask for? I would say this meets all criteria. XRP is horrendous. New lows. I mean, it won't be long before this thing takes out like the 2020 bear market lows at 11 cents. It will not be long. Absolutely terrible. I don't understand why people still even talk about XRP, let alone care about it. But I get it. I get it. Maybe you had some gains like 5 years ago, and now you're like, XRP, it's not so bad. But remember, you're the only one. I can't say that. I've done quite well on XRP, but it's still trash. You just trade it and then get rid of it, and then wash your hands twice because ew. Anyway, ADA, Cardano, another one. You guys know how I feel about Chucky. Just a trash project. It's total garbage. Been empty promises and just failure to deliver for year after year after year. Did put in a new cycle high this time, so it's not as bad as XRP, but completely melting down. We did hit our target to downside. We did hit the 382. Again, don't think that's just like all of a sudden a bottom because we hit a target. We blasted through 200 exponential, blasted through 200 simple, hit the 382, and just continuing to put in new weekly lows. Just looks like total trash. Hard sell signal. We are at the bottom of the range, though. A bunch of red histograms. So don't want to treat it like a divergence signal, but at the same time, we want to keep our eyes peeled for a potential cross back to the upside. But does this go to 23 cents first? I mean, guys, this thing was at $3, and certain influencers online were talking about how great it was and how they hope it goes back down to $2 so they can buy again. And then they were talking about how they hope it goes back down to $1 so they can reload. And then now that's 50 cents. 50 cents? What? How many millions did you lose on this trash project? Hundreds of millions, tens of millions? God, what a trash, horrible project. I mean, anybody that looks at Charles Hoskinson or listens to him talk for 5 minutes and then says, I want to invest in that guy. I mean, honestly, just reevaluate your entire life because you're making poor decisions. obviously in hindsight, but you know, it's not like I haven't been talking trash about Charles for multiple years and it's proven exactly true. So that's not true. We got Gogan. You don't know what you're talking about. Okay. All right, buddy. Okay. So gold is next, XAU. So obviously we're seeing quite a bit of weakness in the DXY and also the 10-year treasury, which is going to naturally give some strength to gold. So we're able to push back up and retest the 200 simple. We are still below 200 exponential, very close to those, crossing the downside. We did get a hard buy signal and a couple green histograms on the daily. But when we zoom out and look at the weekly, we did just put in a new low since our previous little spike high. Started to get a nice little bounce on the weekly. Looks okay. This is a decent weekly close. Unfortunately, you know, this was the bounce we were talking about where the histogram hits the slope line and potentially gets a bounce. Did not see a bounce on the actual histogram though. So we probably do see continued weakness, and we do have a red slope line now as well. We're still above the zero line, so it's not terrible, but the weekly 821 getting ready to cross the downside, hard sells. I mean, this looks like weakness. We're probably headed down. I mean, realistically, we're going to go to 1751, but after that, probably 1700, maybe slightly lower. Gold doesn't look good right now. It's trying, but it doesn't look good. Silver looks absolutely horrendous. Broke down to a new cycle low, came back up, retested our lows from before as resistance. They did, in fact, reject prices, and then we went much lower. We already hit the 200 simple almost perfectly. Coming back up, retesting the 200 exponential as resistance. Got the first part of the measure move to the downside, but I do expect continuation into the teens. Gold silver ratio. So we got the breakout above the 382, above the 200 exponential and simple, continuing to the upside. We did see a little rejection. We did see a little follow through. But again, I would expect this to come back down to like 82, find support, and then continue higher. This tells us that gold compared to silver is probably going to be gaining value, possibly for a couple years. Onto the pot stocks. So we saw a little rally from the new lows on, what do we have here? ACB. So we rally back up above our previous low level, holding support for now. How does it look? I mean, it looks better than new lows, but that doesn't say much. The weekly actually looks slightly better, as again, it does look like a rejection. It's a green candle, but it looks like we reject low prices, then we reject higher prices. So, I mean, if we can't go lower and we can't go higher, and then one of the two forces is going to win, either bulls or bears, I would say the bears have been winning for like years, so they're probably going to keep winning. So I would say probably it's just going to go lower. So I fully expect new lows on ACB. Looks like it's about to get another 821 cross. I'm sorry, stochastic cross back to the downside. These pot stocks, eventually they'll find a bottom, but I mean, we're not going to pick it. We're not even trying to pick it, and it's probably going to keep going lower. You know, and we've been saying that the whole way down. I mean, Tilray right now is at $5. People were saying at $10, this has to be low. People were saying at $20, you know, or 15, whatever it was, 14 right here, has to be the low. People were saying, you know, the whole way down. This is the low, this is the low, this is the low. They're cut in half and, you know, down by 75%, whatever. You know, got to scalp these things, got to get that money and get out. Or at least take back our initial investment and then hold positions, build positions for free. But Tilray, looks like it's going lower. I mean, it's only, at this point in time, it went down to $4 and it's at $4.66. So sure, it's up 15% off the lows, but it's down, I mean, I don't even know, 99% off the highs. I mean, at some point in time, sure, there's value in these things. But again, when they get overvalued to the upside like this, it's not unrealistic to think that they could get undervalued to the downside. This thing is down 98.44%. I mean, we're literally, Tilray is almost like a micro strategy type play at this point in time with its downside. Not really. MicroStrategy went down like 99.9%. But regardless, I mean, 98+% to the downside. That is brutal. So if you had $100 at the top, you got, you know, $1.50 left now. Yikes. CCJ. So we're seeing the uranium stocks fighting with the 200 exponential and simple for now. Probably are going to go lower. Not necessarily like, nearly as bullish as most of what we've seen. None of the energy stuff is nearly, or bearish, I'm sorry. Probably do see continued downside though. Looking for our targets to get hit on these. We're just being patient. But we are looking to reload. Took some profits at some nice areas. Definitely looking to reload at lower prices. Again, URA broke down from key levels. Definitely underperforming compared to other uranium stocks. Already retested 200 exponential. We do want it to get down here just a little bit lower to some of our key fib levels. So again, and we're seeing some divergence playing out. Makes sense that these are, getting tired. Probably going to be going lower. Same thing on UEC. When we switch to the weekly, we came down to key support. We're at it right now. We want this level to hold. We obviously saw 3 big peaks. Each peak sold off and took us back down to this yellow support. Sort of like ascending support line. So we do want to see that hold. We did see some bullish divergence from the bottom. We had like a double bottom, slightly lower low right here. And then in price action, we had a slightly higher low right here off that line. So maybe we can print some other kind of divergence, possibly go lower than the previous low, or, without the histogram going lower, something like that. Same thing with the stochastics. No divergence on the stochastics. But again, we could potentially have a lower low right here, a breakdown to the 200 exponential, and then print some bullish divergence, and we could be a buyer there. But again, we just got to be patient with these things. And then UROI, again, extremely, extremely underperforming. We did have our target to the downside. We're looking at potential scalp retest of 200 exponential and simple. But I need to see the whole space strengthen. I can't just see a nice setup on UROI when it's underperforming and then expect it to suddenly like overperform to the upside. So hard sell signal already at some key support levels. I don't think it's going to break lower anytime soon. But if we do lose the 382, there's not a lot holding this up. I mean, if we lose the 382, we're talking about $1. Not necessarily, but, there's literally just daily or weekly candles up from, $2.50 to $1. So we could easily see a retest of 0.5 or 618 if we break down from the 382. So we already tagged the 382 with this wick right here. Really need to see that hold. If it does not hold, this could get nasty. And we are already printing lower lows on the weekly here. So again, UROI looking much worse. All right, that's all I had on the agenda for today. If in the future you plan on catching the live stream or don't plan on catching the live stream and you would like a particular asset added to the list, feel free to submit that down below. Let me know in the group or in the comment section, and I'll be glad to have a look at that. Even if it's something absolutely trashy that I would never buy, gladly take a look at it and do some technical analysis. Obviously, we go live every single Friday from 11 till roughly 1 p.m. Eastern Standard Time. And then we have our Sunday market look ahead and our Wednesday mid-market, both starting at 8 p.m. Eastern Standard Time, going until about 10 p.m. Eastern Standard Time. So if you do want to check out the live streams, that's when they take place. Make sure to like and subscribe. Obviously, share with anyone that might be interested, as I do greatly appreciate it. Appreciate all of the group members, new group members. I'm sure you guys are learning a ton, and most of you have probably saved countless amounts of dollars by not buying the dip every time it dips. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I think that's it. We'll jump back in the comments, see what's going on, and we can go from there. Free falling, dip enough. Lazy boy, you want to look at Hex? Yeah, we can take a look at Hex, man. We looked at it not too long ago, and I can't remember. I want to say we were expecting lower prices and then a bounce, but we'll see when we pull the chart up. What were we looking at that on? Was it Uniswap? Has to be Uniswap, right? I think it was Hex USD. It might have been Hex Tether. I can't remember. Yeah, that's the one. There she blows. All right, so Hex on the daily. Yeah, so we had the push back up to 200 exponential and simple, got rejected, back down at support. Obviously, we have a pretty strong horizontal support around this level. I mean, all these charts look the same. They're basically just holding support. So yeah, we have this key support in yellow right here. We're sitting on the support. If we break down from the support, we would expect it to go lower and put in that fifth wave down. You know, probably somewhere close to like 6 cents or something like that. So another 50% haircut seems likely. Seems very, very, very likely. Yeah, I mean, looks terrible, obviously. I mean, is it a crypto? Yes, it looks terrible. Is it a stock? Yes, it probably looks terrible. So on our weekly chart here, again, you know, we're looking at basically a new weekly close. I mean, we're slightly off of the previous weekly close. Really need to hold 11.176 cents or whatever. Don't want to have a new close, lower close. The weekly chart has a hard buy on it and a couple green histograms, but let's be real, no respect. As long as we're putting in new lows, 821 still across to the downside. And there's nothing good about this chart. Like, I get it. I mean, look at how perfectly this short setup played out too. I didn't take this short setup, but this was the one we presented as the risk reward for a long versus a short when this was first like brought up around this level. And I said, we're looking at a maximum 30% upside to the top of the channel. And it looks like we're already getting rejected. So we're probably rolling over. And then we're looking at a max 55% downside. So you have a 2-to-1 risk reward ratio to the downside. And in that time, we basically went up no more. And we went down like 30%. So, you know, I fully expect this to continue just melting down. You know, let's be real, guys. The idea behind Hex, sure, it makes sense. But it's just another crypto project. It is not going to be, there's nothing different about Hex. You know, it has a different spin. It has a different white paper. You know, it has a different creator. But when it's all said and done, all these cryptos are correlated like ridiculously to each other. So no matter what your favorite crypto is or the one that you want to buy or whatever, you know, as long as Bitcoin looks like trash, your favorite crypto also is going to look like trash and continue looking like trash. Some will look more like trash. Some will look less like trash. But all crypto right now is trash. It's trash. Depending on the time frame you look at. But, I mean, I don't know how many I don't know how many cryptos there are that are above their 200 exponential or simple on the daily. So, if you're not above the 200 exponential and simple on an asset and the slope is to the downside, my bias is that we're in a bear market and that asset is trash category for investment at the time for either, you know, trading, owning, scalping, speculating, whatever. You know, it's probably trash. So, you know, when it's all said and done, you want to invest in something. Sure, it's nice to buy things low and sell them high. Of course, that's everyone's goal. But I would rather, if you're going to buy something, if you're going to long something right now, for me, I would long something that the chart looks good on. I wouldn't long something that is completely melting down. I definitely wouldn't long something that looks worse than everything else. Like pot stocks, for instance. Pot stocks are probably some of the worst charts in existence right now. I'm not looking to just go long on pot stocks because we're down 98% and I'm like, well, we can't go any lower than that, right? The same way, I'm not looking to buy into some trash crypto project because it was overvalued at one point in time and had a good white paper and now it's much lower. It's just not a good idea. I would much rather buy into momentum of a stock or crypto or something while it's bullish and people are piling into it than buy into something while the momentum is to the downside. And that's a great segue into why I like the indicator oscillators that we specifically use, because they help us to identify those things like momentum or, you know, whether the moving averages are converging or diverging. You know, obviously that's what the MACD tells us. You know, the MACD tells us, you know, and obviously if you didn't know that, it stands for moving average convergence divergence. The idea of the MACD is telling us, are we building momentum to the upside or to the downside? And then from that momentum, we can say, oh, well, you know, when a snowball falls down a hill, as it builds up momentum, it gets bigger and bigger and bigger and becomes harder to stop. So that's like your bear market. So we don't want to buy into the momentum as it's gaining momentum to the downside. We want to buy into the momentum as it's gaining momentum to the upside. And so that's why we're looking for the trend, and it's so important to identify the overall trend. And right now, the trend on most stocks and cryptos is very, very clearly down. And there's people that will argue, yeah, but when you look at the monthly chart, we're still bullish. Or when you look at the weekly chart, we're still above the 200 exponential and simple. And that's the bottom of every bear market in history. And we've had two. I don't know that that's a great idea to just kind of pick a bottom because we did this twice before. You know what I mean? Like if I walk out to like a frozen lake in the middle of winter and I go stand in the middle of the lake and I jump twice on the lake and I don't break through the ice, I'm not just like, oh, you can just do this indefinitely and you'll never break through the ice. Especially when you start to see, cracks in the ice start showing up. And we're seeing clear cracks in the system as far as stocks, as far as the economy, as far as cryptos. I mean, we just saw the 11th biggest crypto project worth tens of billions of dollars go to zero. So I would say there's probably some cracks in the system, and we're only just seeing the beginning of those. So in my opinion, if things keep looking the way they're looking, I would expect a full-on meltdown in cryptocurrency, a full-on meltdown in the stock market, and a full-on meltdown in the housing market, a complete crash of the economy, worldwide, negative GDP prints across the board, and probably one of the worst recessions/depressions we have ever seen. That's what the markets are telling us now. Now they've been telling us that for a while, but they're getting more and more convincing as to that situation now. So maybe Powell comes out and raises suddenly the interest rate, 100 basis points. Maybe he stops caring as much about what the market thinks and a little bit more about, the overall health of the economy and the markets long term. But I just don't see it. I mean, we know Powell is a scared little bitch. We know he's a little pussy. Okay? We know that for sure. Why do we know that? Because 2018. In 2018, the market literally bent Powell over with Donald Trump's help and said, hey, little bitch, you're either going to give us what we want or we're going to take it from you. And Powell didn't even resist. He literally just says, do your thing. I'll just close my eyes and look away. So I would fully expect him to do the same thing again. I mean, I think it's just a matter of time. Maybe it's different this time, but I think it's just a matter of time before we see a big meltdown. Powell capitulates. The Fed comes in, starts, talking about, oh, maybe we underestimated the economy. Maybe we underestimated the strength of the consumer. Maybe this inflation is worse than we thought. You can tell 100% that what happened with the Federal Reserve when they quote unquote retired the transitory term, you can tell for sure when they retired transitory that what they were doing was saying, okay, we're going to just retire this word because everybody keeps saying we're wrong. But you can tell by their actions and the way Powell talks that they still believe this inflation is transitory. Now, you can agree with that. You can disagree with that. You can make a strong argument for it or against it. But the fact of the matter is they still believe that inflation is transitory. Now, keep in mind, their definition of transitory is that the rate of inflation will stop increasing as fast. So we're going to keep having inflation, but it's not going to keep inflating at 5, 6, 7, 9, 10% per month. Well, that makes sense. Because if we start taking off 2, 3, 5% inflation prints from last year, from a year ago, now if we have 10% inflation and we're subtracting out the 5% inflation we had a year ago, now we still only have 5% inflation. So now we're actually, the rate of change or the increase in inflation is going down. So we're not necessarily having deflation, but we're having disinflation. The rate of the inflation is decreasing, as opposed to deflation, which is, we're actually like deflating prices. Prices are actually going down. We're not talking about prices going down. We're talking about prices continuing to go up, but going up at a slower pace. So we're talking about the rate of change of inflation going down. That's what Powell was talking about. And they still feel that way. And there's an argument to be made for it. But the fact of the matter is, the Fed has been wrong They have admitted they were wrong, and they're still not doing anything differently. They're still treating the situation as if they weren't wrong. So honestly, the Fed is in denial. They're in denial right now. So, people talk about something breaking, and in the end, that's probably what has to happen. Something catastrophic has to happen in these markets for the Federal Reserve, for, the government, central banks, whatever, to realize. And you're like, yeah, but there's massive inflation right now. Gas is up 100%. This is up, food is up, meat, everything you can think of is up, ridiculous amount. And that's still not enough because we haven't broken something. We didn't break anything. If people were in the streets rioting because they can't afford food, or, burning down, buildings or whatever, then it's like, okay, yeah, you're kind of breaking something like with the people. If the markets start capitulating and we start hitting circuit breakers and start just gapping down on the indexes or something like that, that's something potentially breaking. If we see the bond market, start having issues, or the repo market, or, some of these other facilities having issues, then we can talk about something changing. But as far as I'm concerned for right now, Powell and the Fed has laid out the path into the future. They haven't even started balance sheet reduction, or maybe they've started it, but they haven't even gotten to the max rev up. So over the next few months, we're going to see their balance sheet tapering or maturing or decreasing faster and faster. So the increase the speed of decrease in the Fed's balance sheet is going to be increasing. So we haven't even gotten to that point yet. Let alone, we've had a 25 basis point hike and a 50 basis point hike. I mean, we could easily see, 2, 3, 5 hikes before anything happens. 5 hikes at 50 basis points each is 2.5%, plus the 0.75% we have now. So that's like 3.25%. That we're starting to talk about actual targets based on the Fed dot plot. So that's what the Fed is telling us. The Fed is telling us we're probably going to get to around 3% by the end of year, I believe it was. Maybe 2.75 to 3.25 was like the range. And we're probably going to be allowing X amount of mortgage-backed securities and X amount of treasuries per month to run off the balance sheet or mature and then not repurchase them in the market. So we haven't even reached that level yet. We're on step 1 of 3 of the balance sheet decrease. And the balance sheet decrease is mapped out over the next 3 years. They're going to basically sell, $5 trillion off of their balance sheet, or allow $5 trillion to mature. So we're at the beginning of a 3-year process. We're one half hike, 25 basis point hike, and then 150 basis point hike in. Or, one regular hike and one double hike, whatever, however you want to look at it. And we know the Fed has how many more planned. There's nothing right now that tells me all of a sudden the Fed is going to pivot and change their mind on bad news or on good news. So when it's all said and done, I fully expect the trends that we're seeing in these markets to continue or even possibly strengthen to the downside. So that being said, I think that's enough for today. I'm going to go ahead and wrap it up there. Lazy Boy says, thanks, of course, my friend. USDC, yeah, that's right. 6 cents is my target, he says. Yoda says, bloody hell, I missed the live stream, guys. Don't worry, you can always watch it back, Yoda. But do appreciate you always showing up, my friend. It's always good to have you. So yeah, we're going to go ahead and wrap it up there. Great job, says Lazy Boy. Thank you, my friend. Appreciate each and every one of you tuning in today. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Protect that principle. Be intelligent with your investments. Don't try to just pick the bottoms on all these things. Obviously, you can do whatever you want. You can dollar cost average on the way down. But let's be real, you are much better off buying into strength than buying into weakness, or selling into strength in a downturn than you are buying into weakness. Craig Man says, thanks, Crypto Trend Trader. Appreciate it, man. Thank you, guys. I'm very happy to have the best community in the investment, crypto, all that space, everything. Obviously, probably outperforming just about everyone in the community as well, as we have pretty much nailed all of these moves in, all the various markets, crypto, stocks, bonds. I mean, we have literally, I don't know, what's the term? Yeah, your thumb on the scale or whatever, thumb on the market. I can't think of what the analogy is, but I mean, basically, these markets are a bitch. Whatever we say we expect to happen or the markets are telling us they want to happen has literally just been playing out. So I think if we just keep doing what we're doing, we will keep crushing it, keep growing as a community, and of course, keep growing those balances. But the real opportunities are going to be when no one's looking. So, we're starting to see, obviously, views falling off in investment or YouTube finance or just finance in general. People aren't talking about cryptos the same way. People aren't talking about stocks the same way. People are giving up. They're capitulating. I think we've only just begun because people are still looking. Markets don't bottom until no one's looking. It happens in the dark, on a Tuesday at super low prices when everyone has just given up and no one's even paying attention anymore. And then finally, there's just no more sellers to sell. That's what the bottoms look like. That's what it was in the crypto bottom recently. That's what the, stock market bottoms have been in the past. Obviously not so much with the Rona dump, because that was more like, obviously like a artificial V bottom, sort of like a blow off top is. Typically most bottoms are boring and tiresome and just exhausting. So that being said, yeah, going to go ahead and wrap it up there. Hopefully everyone enjoyed the stream today. If you didn't catch it, make sure to go back and watch the stream later on. But going to go ahead and wrap it. So take it easy, Bill. Good to see you. Appreciate your appreciation. Glad you guys enjoyed it. It is Friday, 12:39 p.m. Eastern Standard Time on May 20th, 2022. I am Crypto Trend Trader, and we can go ahead and wrap it up there. Everybody, be careful over the weekend. Obviously, we are seeing some serious weakness going into the weekend. Maybe we see some kind of counter trend bounce on crypto. Maybe we see continued weakness. But as always, we would expect roughly where Bitcoin futures closes today to be where spot market ends up on Sunday around the time of the reopening. So like always going into the weekend, I mark the close of Bitcoin futures on my chart and then pay attention to that for spot market, as it typically will revert to around that level by the end of the weekend. So but it could be a good scalp opportunity, but it will be counter trend trade. So we'll need some nice risk reward ratios. Could obviously just see continued capitulation as well. So, but that's it. If we do see some weakness into our Friday close on stocks and cryptos, we fully expect statistically that weakness to continue on Monday, which seems very likely at the time. So that's it. Crypto Trend Trader with our Friday wrap up, and I am out of here. Peace. Yeah, that's right, Bill. And I'm out of here. Later, guys.